Hey traders, welcome back. It is Monday, September 23rd, 2024. I got another video for you. This was a trade that I had taken today on an NQ fair value gap. There was a bearish fair value gap on the 1 hour chart that I had taken a short off of. There were two different shorts I had taken. I'm only going to highlight one of them. The other one was more of a high risk trade, I suppose. The price action wasn't great. I didn't get really a clear signal. It ended up working out, but it was a very quick trade. But the one towards the latter part of the day, well, it was at 10 o'clock Mountain Time, noon Eastern Time, uh, had a clear signal, and I'll go over that. But prior to that, today was a pretty choppy, uneventful day. There's a lot of choppy action. If you look at the 15-minute chart, you see bodies with big wicks on the top and bottom, and this type of action is tough to trade. A lot of when you see days like this, it's especially as option traders, as an option trader, as a day trader, it's sometimes best to, when you identify these days, just to take the day off, right? You have to remember one thing. As traders, we don't have to trade every day. And I know that, as beginner traders, intermediate traders, we have this idea that we need to trade every single day. We have this high, that knowing that we can potentially make good profits in the market, that we want to just jump in the market because we want to make money, because we know that there's opportunities to make a lot of money in the market. So we feel like we have to trade every single day. But as you become more and more experienced, you realize that, there's days where they don't give A plus setups. You're not going to get A plus setups every day. You're not going to get big explosive moves to the upside or to the downside, get 100%, trades every single day. When you see this choppy action, it's best just to sit out. If you have crappy price action, it's best to just sit on the sidelines those days and wait for tomorrow. There's always tomorrow. The market's not going anywhere. So you don't have to trade every day. So that's one key thing about anyone who's watching this video. If you're a beginner trader, kind of just getting your feet wet, you just started trading options, you'll learn as you continue on your journey that there's days where you're going to see price action that just doesn't look good. It's not suitable for your strategy. And when you identify those days, it's best to just sit on the sidelines. You can continue to watch the charts and kind of understand how price is moving, but these days are tough. I trade 0 DTE, so I got to be very precise with my trades, and I have to have a very tight stop. And if trade goes against me and it hits my stop, I got to get out. Some days are just tough reads. You're not going to see clear, good price action every single day. Today was one of those days where things didn't look great. I had one trade idea. Well, two really. I wanted to see price come back down into these bullish fair value guys on the chart. Like this 481 area, this 5,718 area on ES. And if I saw a move down into there, I'd look to take a long position. There's separation between that level and levels above, assuming that we didn't get any additional bearish fair value gaps on the way down to there. That's the key thing, is if price does move down into those levels, we can't just immediately long those, because we have to be aware of any bearish fair value gaps. So if we're looking for a long position down here, which is something I was looking for today, I have to make sure that, if I'm taking this trade, we're not creating any bearish fair value gaps on the way down, right? Because if we have a level here, we don't want to short, or we don't want to long into that position, into that area. So we have to be very cautious to that. So if there's a bearish fair value gap that's created here, we don't want to long into that, right? I mean, depending on where it could be right above where we're expecting price to move up, right? Where we see some some buying activity. We see bullish buying pressure here. We don't want to long into that. We want to like mitigate this and then create separation. Really, that's what we want to find, is some separation. I don't take those trades now. Yeah, these trades can work out, right? But I don't get upset if, and I'm not going to lose sleep if, there's a bearish fair value gap. We move into a bullish fair value gap and price just busts right through that. I'm not the one to take those trades. And there's times where those do work out. And again, I'm not going to be upset or lose sleep over that, because that's one of the rules, is I need separation. Now, if this fair value gap, is way up here, that's a different story, right? There's separation, there's space. So there's a good risk to reward trade there, because, I'm not worrying about taking a long position here and price just kind of bouncing right in my face. So anyway, that was one of the trade ideas, was looking for a move in one of these bullish fair value gaps. And the other one was this 1 hour bearish fair value gap on NQ. So we can see it here in my chart. This is NQ all the way to the right. That's the bearish fair value gap. We did move into it a few times today. I did take one of those trades. They were very quick trades, but I want to kind of show you why I was very cautious on taking shorts today, because there's a level that I really haven't talked about, but I'll get into it and show you what I was really looking at and where I wanted to take profits after taking my short. So I have this back on replay, and I'll go ahead and play it here. So market opens up. Now, when we opened, we rejected this previous day high. Now, I didn't take that trade. We rejected previous day high on pretty high volume, and I just that's too early in the market. I'm not taking trades right at open. That's another one of my rules, is I have to kind of get some clarity on the market. When the market opens at 7:30 in the morning, I need to find some direction. I need to kind of see what, market direction. And I like to take these continuation trades. So I need some time. And I'm usually not taking a trade for 15, 20 minutes until the market's open. I just gotta see how the market opens, and I want to try to identify if we're weak or if we're strong, if there's any strength. And taking trades 2 minutes into open is a no-no for me. I need to kind of analyze how we look when we open. So there can be trade opportunities right at open, and if we just see an immediate drop on the market and there's the levels not until there's several points down before there's the next level, that's fine, right? That huge explosive move to the downside will likely create an opportunity and another bearish fair value gap, for instance. And then I'll wait for price to move back into that level for a move lower. That's the mindset that we have to have. You don't want to chase. If there's anything, if the market just makes an impulsive move to the downside at open, and there are some times, I will say, where if we move into a bearish fair value gap and we see a rejection right before open and I see that weakness, I will say, to be transparent, there are some times where I'll take small positions on those trades, right? But I'm not going to go full porting, any sort of position at open. I'll take a couple, I'll take a couple contracts, tight stop, but that's honestly that's very, very rare that I take any trade right at open. So anyway, let's get back to it. Market open, rejected the previous day high on SPY. We're moving away from QQQ's previous day high. And let me introduce something else that I was looking to do. And I've mentioned before on previous videos that one thing I look at is NVDA. Right now, when we opened up, we weren't like right in this area, but I knew that shorting into this area is something I had to be cautious of. Now, what is this area? Well, this is a daily fair value gap on NVIDIA. And being that we're very close to this, as price moves down, if we create bearish fair value gaps, I have to be very, very cautious of taking those types of trades. I have to be aware of where we are in the market. That's one of the things that we need to do as traders. It's market awareness. We need to know like where we are in the market. And NVIDIA is one of these stocks that helps me guide my trades. Uh, you know, I do look at ES, NQ, SPY, and QQQ for my trade decisions, make my trade decisions, but I also look at NVIDIA as well. And this daily, not only is it just a daily fair value gap here, but we also have this 20 daily SMA sitting right here at the edge of the fair value gap. So again, as the market opens, I have to be aware of this level, okay? Does it mean that price can't just sink right through it? No, of course it can, right? But it's, again, all about awareness. So if we're looking to take a short position, we have to be cognizant. We have to be aware that this zone exists and that we have not only the zone, but we have a 20 daily simple moving average. And that's kind of the confluence that we look for when we take trades, right? Is that we have not only a fair value gap there, but we also have something else, such as the daily simple moving average. We have this SMA sitting right there. So anyway, let's kind of fast forward a bit, right? We move into the fair value gap eventually on NQ. I don't take the first. I take this. Well, it's technically the second rejection. Wasn't very clean. I didn't take a very big position here on this. It wasn't until the 10 o'clock one. Now, it wasn't very clean, but I'll stop it here. This was the one I took it off of. What I didn't stop it. I took it here. And the reason why is because we moved into it, and I think it was on the 5-minute chart. In the 5-minute, I saw this candle here, which, if you look, it's all about the volume spread analysis. If you look at this, this is the real candle that I was really focused on. And if you compare it to this one here, this is what gave me the reason to take a shot at it. Now, the thing that makes this a trade that's high risk for me is the fact that we're over previous day high on SPY. Now, both trades that I took on QQQ were above previous day high on a level, right? It was above previous day high on SPY, and that's a high risk trade because, as I say all the time, you don't want to short into demand, or you don't want to short into a key level, and you don't want to long into a key level, right? Because price can react off of that level and bounce right in your face, just like we were talking about with NVIDIA. And that's why, that's considered a high risk trade for me. So when I took this trade, we were above previous day high. So there's a chance that price can bounce right off of this and bounce right in my face and go higher. All right. But I had some confidence in the trade somewhat because of the fact that, looking at the VSA, if we look at this candle here, we're looking at the volume on that particular candle, right? And it's this here. Now, it's not ultra high volume, but we're comparing it to this candle here, right? This is a big candle, and we're just comparing the volume, and this is higher volume. But you look at the spread, right? When we say volume spread analysis, we're talking about the spread. Like, look at the body. So there's not a lot of price movement, right? So price barely even moved. It's basically like an indecision candle, sort of, right? A little bit of a high risk trade, somewhat, yes, because this isn't like an indecision candle. Like, where's the market going? But it was a volume that kind of told me, let's give it a shot, right? And not to mention, we're barely, over previous day high on QQQ, right? I mean, really, it was this candle here where I had taken a shot, but we moved up into this level, same sort of VSA, right? We look at this big long candle, and that's the volume, on that candle. Here's the volume on the candle, right? That's the long candle. And then we kind of halted. We weren't able to break it over previous day high on SPY. So there's two key areas here, two areas of like confluence that is preventing price from going higher, right? It's previous day high with comparable volume, right? And there's wicks on both sides, but we weren't able to get over it. So we've already rejected previous day high once. And we went this long candle and we moved back into it again. And that's why I wanted to give it a shot, because we failed it once, we're attempting it twice, and we're seeing this volume analysis telling me that there's still selling pressure there. And when you compare these two, again, as I say all the time, right? If this was a lot of selling or buying pressure, we would see a candle very similar. But the fact that we don't, there's got to be a lot of selling pressure if there's almost the same amount of volume. Now, again, it's not the same, but it's very, very similar. It's very close, right? We're talking about, on NQ, if I go to the top of this volume bar, it's about 4,500 shares versus 5,800 shares. So it's not a huge difference, but there's a huge difference in candle size and in price movement. So that gave me a reason to give it a shot. Now the next candle moved up a bit higher, but all we did was kind of go into the median and we rejected. And that was on higher volume than this previous candle. I stuck in there and I got out where I was wanting to target this next key level. But now let's kind of talk about this other area that we're talking about. Now, 8:30, this is where price started to move down, and about 9:10 is where we moved into a level. Now we're looking at the market and we're like, well, price is kind of wicking off of what? So at 9:05, we look at NVDA, right? And we're right in this area. Now this is a high risk trade because we're in this level, right? 9:15, we're right here, right? So we moved up, and then we rejected on the fair value gap, and we moved down into this level. So this is one thing that I was paying attention to, was moving down into this level, right? So I have to I had trimmed and I had taken some shorts off and I had runners at that point. But the other thing is this, the other thing that I'm watching here, and this is a separate chart, is a gap. And we're not necessarily talking about a fair value gap, but this is a gap when we gap overnight. And so in addition to me looking at fair value gaps, I have a separate chart that I'm kind of paying attention to for, as you can see, SPY, QQQ, and I've got NVIDIA on here. So that let me just take a moment to touch on something that I really haven't mentioned before. So these gaps, and I'll just show you what this gap is. This gap on NVIDIA is basically a gap that's created, when we gap up overnight, right? So we gapped up from after hours to pre-market. Okay, so let me kind of explain how these gaps happen and why they're important. And this may be a no-brainer for more experienced traders who are watching this video, but for the beginners, we'll kind of talk about this quickly on these gaps, right? And I'll specifically talk about QQQ and SPY. Okay, so SPY and QQQ, they both follow regular stock market hours, right? So from 9:30 a.m. till 4 p.m. Eastern time, they have their normal trading hours. But outside of those hours, because they'll continue to trade after hours, right? So then at 8 p.m. Eastern time, after hours trading discontinues. It stops. So QQQ and SPY stop trading, and it's 6:51 Mountain Time right now. Okay, and if you look here on the chart in real time, we're not trading any longer. So we're done trading at 8 p.m. So we're finished now. But ES and NQ continue to trade. So outside of those hours, right? There's outside of those normal trading hours or outside of like after hours, there's still a lot of price movement happening. And the market still has adjustments. So these movements will get reflected when the market opens the next day. And that's why you see these gaps, right? So you'll see, a gap up. So from after hours to pre-market open, we see this huge gap on NVIDIA. Okay. Now, talking about just SPY and QQQ, right? We have these gaps. So after pre-market closes at 8 p.m. on SPY and QQQ, ES and NQ respectively continue to trade. So these are futures, and these contracts trade almost 24/7. So they don't have the same sort of overnight gaps. The futures market is constantly adjusting in real time, and then they're filling in those price changes without creating any sort of gap. So even though ES and NQ don't show these gaps on their chart, like SPY and QQQ, and now, even other stocks like NVIDIA, price will still react when price comes into these gap levels, on QQQ and SPY and NVIDIA, and we can see price reacting off of that level, right? So we have a gap here, and we can see that NVIDIA is, reacting off of that level. Well, so why does that happen? Well, these gaps, they represent an area of imbalance, right? Just like fair value gaps. So they represent an area of imbalance, and these are where orders are left unfilled, and just like fair value gaps, the market will often gravitate back to these levels and grab liquidity. All right, so even though you might not see these gaps on ES and NQ, these price levels are still important and can provide good, they can provide good, like, key support and resistance zones, basically. Okay, so next time you see a gap on SPY, QQQ, NVIDIA, like, think of that as a clue. It's showing you where the market moved outside of these trading hours and where traders are usually paying attention to those areas. So, we see on SPY and we see on NQ, they have the same sort of gaps. And when we go back, we can see similar to the gap that was created on NVIDIA here, we can see SPY have a gap that was created right there. We can see QQQ has a gap right there, just like NVIDIA has a gap right here. Okay, so price tends to come back down into these levels, and price reacts off of these levels. So these are important areas. Now I'm watching these as well, and now how does this relate to me taking profits? Is that not only were we moving into this level and moving into a very key simple moving average, but we were also moving into this gap on NVIDIA. Okay, we didn't have one on QQQ and SPY. As you can see, this was today's trading area, but we weren't in a gap here. Okay, so we didn't have any sort of gap that I'm referring to here. We didn't have that. We didn't have that on QQQ, but we did have a gap here on NVIDIA, and that's what I was paying attention to. So at 9:15, right around here, we're in that level, and when I start to see that, high volume, then I want to consider getting out of my position. Okay, so that's where I took profit. Quick trade, wasn't a very big trade, to be honest with you. Right, it was just a quick scalp position, but I was happy with it. This is, again, these market conditions. You have to, you don't want to be reckless with the trades you take, right? The market can present opportunities, but it's all about market awareness, and you have to know where these key areas are, because in this volatile market where you see a lot of choppy action, you can get beat up pretty quick when you're trading options. All right. So that trade had happened. Now we go back and we continue on. I'm going to remove these arrows here real quick. So we continue on. I started to see some bullish pressure. I see price moving up with higher volume. I think even on the 2-minute chart is where I saw some good volume, and I wanted to get out. Created a new fair value gap, and same situation, right? Because now this fair value gap is lower, right? So as these fair value gaps are lower, right? As price moves down, NVIDIA is moving down. We're moving down into these gaps. We're moving down into this gap, and we're moving down into a fair value gap on a daily fair value gap. So these fair value gaps that we're creating, I'm not really too interested in those, right? Because as we move lower, right, if we move right back into this fair value gap and we're looking to take a trade off of this fair value gap, guess what? We're already in this level on NQ. And that's where we talk about having two fair value gaps stacked on top of each other, right? We need separation. We need space to have a high, like we need to, we're thinking about risk to reward, right? So we can't take that trade because we're now shorting into a very, very important level in NVIDIA. Okay. And that's not the type of trade that we want to take. So we need separation. If there's a fair value gap we move up in price and then we move down and we create a fair value gap way up here at 571 or something way higher, then that's a different story. And even this fair value gap on NQ, that's really what our interest is, because there's separation. There's some space between the NQ fair value gap and this fair value gap on NVIDIA, and this gap on NVIDIA. So as we move lower, we don't want to be interested in these fair value gap trades. Can they work out? Again, yes, but you can't. If they work out, you don't want to sit there. The mentality you have to have is, oh well, it moves without me. Okay, it's a big deal, right? That's not an A+ setup. And we're just going to wait for an A+ setup. We're going to look for a high probability trade setup, and that's not one. So don't you don't have to beat yourself up if you see price move into this bearish fair value gap and it goes 60% and we're just sinking through this NVIDIA bullish fair value gap, right? Sure. In hindsight, it's always easy to say, oh man, I should have taken that trade, right? But guess what? If you do take those trades and then you get nailed, you're going to think to yourself, I know my rules. I don't take those trades. Why did I take it today? Right? So again, it's always easy to say in hindsight that could have been a great trade. But when they don't work out, you say, wow, that was silly of me. Why would I take that trade? I'm shorting right into a bullish fair value gap. Doesn't make sense to me, right? And you look at this candle right here, we already saw as price moved into it initially this morning, like we saw this bullish pressure, boom, like we saw that. So even taking this fair value gap trade was high risk, just because of the fact that I saw there was buying pressure down here pushing the market up. So that was just not a quality setup that I really like. So I took it, didn't really, I don't remember if I said anything on stock choice, I don't remember, but I didn't want anyone to follow me on that because it wasn't a high quality setup. So next thing we continue on. It was the 10 o'clock trade that I took on this bearish fair value gap. So price kind of moved around a little bit, and then we did just blow right through that fair value gap. So you can see that bearish fair value gap on QQQ in a 3-minute, and it just moved right through it. And the reason we want to take that trade because we're in a bullish fair value gap. We're in a gap on NVIDIA. So I would expect price to move through it. I wouldn't be surprised by that. So then now we move into, we're about at the 9:40 time frame. Now where are we? Okay, so let's talk about where we're at. Where we're at is we're now back at QQQ's previous day high, and we're in a bearish fair value gap on NQ. The type of setup that I like, right? Because not only are we just in one single fair value gap, but we have another key level that's coming into play here, and that's previous to high. So this is another trade setup that, I'm interested here. Now we're back in this level. Let's see what we do here. And this is the this is the 940 candle. Let me play it a little bit here. We break over it. Now this is on the lower time frame. Now mind you, I'm on a 2-minute time frame. All right. So we see this candle here, right? Maybe this like pin bar, no volume, right? No volume at all. We break over the over previous day high with no volume, right? This has a little bit more volume, right? But this has no volume. So okay, all right. Well, this is a move I'm not concerned about. We broke over it on the 2-minute, but there's just no volume. So there's no buying pressure that's telling me, hey, we want to break over this previous day high. So now this is the 945 candle. So when I see this 945 candle, let me switch back to the 1-minute because I'm going to show you something on the 1-minute that I was actually looking at. I look at multiple time frames. Like I said, I have a screen that has my 15-minute, and then I have another screen that has the exact same charts that has, and I flip at different time frames. So I was looking at the 3, 2-minute, and then I switched to the 1-minute chart because the reason why I look at the 1-minute chart is because I want to see if I see an impulsive move to the downside on high volume. And this is what I was in on this 940. When this candle closed, I was ready to, I was waiting for this of course, we wicked up over, right? Exactly what I want to see. We wicked over, we touched this, the median on the fair value gap, exactly what I want to see. And then we started to pull back, right? So on the 15-minute, we, buyers push price up and then sellers are pushing price down. So I wanted this to close and reject the previous day high, and I wanted to see us close outside of the bearish fair value gap. That's what I wanted to see. Now I'm literally waiting for this to close. Once I see this close and I like what I see, I'm ready to hit the buy button. But on the 1-minute chart, this is what I saw. So let me just play this. So as I'm waiting, I see that right there. So I see this candle right here on the 1-minute chart, and I saw this, bearish candle under extremely high volume. Look at this. That was the most amount of volume the entire day. Okay. All the way up here, 48,000 shares. Okay. I saw it on QQQ. And that right there gave me a clue. When I saw that, I was like, all right, I'm ready. I'm ready. And and then I went back to the 2-minute chart, wanted to just compare what 2-minute saw, what I saw on the 2-minute. Same thing. Look at this. Look at the amount of volume on this. Right here. See that volume? Right? One of the highest volume candles, the third highest candle volume of the day. Right? So we're just getting ready to close because this is at 9:58, right? It was 9:58. So that candle, that 15-minute candle is about to close in 2 minutes. I pulled the trigger right there when I saw it. Because I just kind of, I already knew based on that selling volume. Now, how do I know this is selling volume? I guess this all comes along with experience because I've seen this before, but I wasn't, if I have two, here let me kind of explain my thought process around this, right? Hopefully this makes sense to all watching this video. If I see a candle like this, okay, and I see all this, I see this amount of volume, right? This is clearly not buying pressure. This is selling pressure. Same thing here. This is an ultra high volume, but look at the candle, okay? I have 2 minutes left on my candle to close to get confirmation on my 15-minute, okay? Yes, we do want to wait for the 15-minute candle closure to get confirmation, okay? And we do have to be patient most of the time. 95% of the time, yes, we do. But there's a 5%, maybe more, where when I see signals like this, I will pull the trigger slightly early because I don't necessarily need to see, because as you're watching the 15-minute candle, right, as you're starting to see price up here and then you're starting to see the body and closure start to slowly move down, and you start to see this volume start to increase, And when I see that particular candle on the 1 minute chart, I can make a logical decision here that within this 2 minutes, it's very sure anything can happen in the market. Okay, where this candle can shoot up and close above previous day high and shoot above that. Is it likely? Probably not. The thought process again is around the fact that I'm seeing price move down on this 15-minute, right? The body was up here and then it was a green candle and started to just continuously move down. It's moving down. So as the time is for that candle to close is decreasing, price is moving down. The candle is becoming more bearish. Volume is increasing. So the fact that I'm seeing increasing volume, price moving down on the 15-minute, and then the 1 minute chart, I see that particular candle under that extreme volume. I think it's pretty fair to say that that's all selling pressure and that we're going to continue to see price continue to move down within that 2 minutes. It's unlikely for me to see price move up any further in that 2 minutes. And if it does, then I get some, then it's just what it is. I'm not going to sell out of my position because I still, I'm still within my stop. So even if it did close that way, then I'd wait to the next candle and see what happens in the next candle. But that was just an indication when I saw that 1 minute. Let me take it, and I bought there. I did not wait for the 15-minute candle to close, and that's where I took my position. And then that's at that point is where I just I turn on my 9 EMA. I was targeting this low here, but there was I think a 3-minute fair value gap I below. I thought there was no, but I was targeting here, but I was also aware of where we were on NVIDIA. I had to pay attention to this level, and that's exactly what I did. I took profits there. So price rejected right here, 10 o'clock, 9:45. There's your candle, and I was waiting for price to move back into the same area I took profit before. That's my my target. I wanted to see something lower, right? Because this was probably going to be a bigger rejection just because of that volume. Now, I will point out one thing, right? Again, same situation as before. Is this a high risk trade? Yes, it is. Again, because we're shorting into this previous day high on SPY, and there is risk of this, bouncing right in my face. But I was willing to, I was willing to take a shot at that again because of the volume. This was a better setup than my previous setup. I like what I was seeing. We're under, extreme volume, selling volume based on how I read price action there. And I was willing to take a shot. I took a little bit of a bigger position than I did my previous trade, and it ended up working out. I was very aware that when I turned on the 9 EMA, because I turn this on when I take my trades to help guide, my when I would want to get out. I knew ultimately where I wanted to get out in the NVIDIA, but I turn that on, and then as we continue on with our price. We just dropped. Now I was really cognizant in this area here, so I'm watching price actively, but we didn't break over the 9 EMA. So I mean, and it was ended up being a good trade. I saw on the 2-minute where we saw some pressure, and that's where I was able to get out. But price just continued to just stay underneath the 9 EMA. It was a pretty solid trade. And once we moved into the NVIDIA level right here, that's where I saw an increase in volume. And that is where I think on the 5-minute chart, if I switch to the 5-minute chart, we'll start to see right there is where I saw an increase in volume. No, it wasn't. Let me keep going. Sorry, that wasn't it. It was this here. When I started to see that, when I saw that candle there, I waited for price to break over it, and that's where I got out of my. I took 80% of my contracts off on this candle right here because that was at 11 o'clock, and that's where we moved in to the level right here. And when I saw like this little bit of increasing volume, I took off 80%, and I wanted to see some continuation. I wanted to see, it go back into this 90 May and reject, and we didn't. We just started moving to the upside, and then I sold off the rest of my contracts. So it was a pretty good trade, better than the last one. And this is kind of, these are the setups that you have to look for in these choppy days. Not 100% trade. Again, we can't get those all the time, but You got to do your best to try to read price action in these areas. The key areas that you see, especially when you see fair value gaps and you see price move into previous day high, previous day low on other tickers like we see here on QQQ, those are the setups that you want to look for, right? Not only do we have the fair value gap, but we also have previous day high. And you know, folks who follow know that I talk about previous day high and previous day low all the time because those present trade opportunities all the time. And I'm a little surprised that there's a lot of traders that don't even have those levels on your chart, because when you align those with fair value gaps, they present high probability setups. So again, it was a decent day today. Um, like I said, some choppy action, but there were opportunities out there. I wanted to make this video because in the event that you had a difficult time trading today or you weren't able to find a good setup, I wanted to show you, walk you through my mindset and what I was looking for and why I took the trade that I took. Well, specifically this one here, I wanted to focus more on this second one here because, that provided a little bit of a clear signal. But as I said at the beginning of the video, you're not going to get, A plus setups. You're not going to get continuation every day. There's a lack of continuation, and I kind of figured there were just because of the levels. But I think one of the big takeaways here is I continue to provide content on fair value gap trades, why I take the fair value gap trades. But I think what can be valuable to those watching is just keep an eye on NVIDIA. All right, it's a heavy influencer in the market, and I do pay attention to it. Those who follow, like on StockTwits, know that I'm always talking about NVIDIA, because whether NVIDIA is going into a fair value gap, it's very likely to move the market, right? And as you can see, like QQQ and SPY, they react where NVIDIA does most of the time. Does it always? No, but again, this goes back to market awareness. If you're taking a short position, know where you are in NVIDIA, right? Be cautious, because I just say be cautious. If I'm using the term cautious, just be aware. Just be aware of the fact that you're shorting into a very key level on NVIDIA. If you start to see the pin bar with high volume and you're in a short position, maybe it's a good idea for you to trim, take some of your contracts off, de-risk your position, because as price moves into these key levels on NVIDIA, there's a very, very good, very good chance that it's going to move the market and the market's going to follow. So anyway, I'm going to run. Hope this video was insightful, helpful to you guys. Please, I do my best to provide as much content, as much education as I can, whether it's through YouTube or other, other venues, StockTwits. Do me a favor, like my videos if it's helpful. Drop some comments if you guys have questions about it. Any of the content that I'm providing, please don't hesitate to reach out. I do my best to check any questions that you guys have on various platforms that I'm on. So, feel free. I'm here to help out. There's a lot of, these influencers out there that are charging a ton of money for classes. I've got classes that I'm, holding that are a fraction of the price, right? Because I'm not really here to, it's not about the gain in that. I mean, my time, I have to charge for my time, right? I don't have all the time in the world to just teach everyone how to trade for free. So I've got classes available. I did increase them a bit because there's an increasing demand, right, for classes. So I was charging $20 for a 2-hour class per person. I've increased those rates to $50, and private lessons were $50 per hour, and I've increased those to $100. So even with the rate increase, if you look at other very good traders out there, they're still charging significantly more. If you're a struggling trader or a beginner trader and you're looking for a very effective strategy, this is it right here. You know, this is, if you learn how to trade the fair value gaps, you know, as long as you know, it's not just about the areas of where you take these trades. It's all about, you know, risk management. There's several other things. There's psychology, which is something that's not talked about a lot. I'm going to be making a video about that soon. But, you know, psychology, you know, risk management, you know, you can't full port all these trades. You know, if price goes into a fair value gap, you can't, you know, put your whole account into that trade, right? You got to assess risk to reward. You got to, you know, assess. Sometimes there's not A plus setups. Maybe it's a B setup. Maybe it's a C plus setup. And if it's a C setup that you're not sure if it's going to work out, you know, take a few contracts. Take, you know, 10 contracts. Don't, you know, buy 30, 50, 80 contracts of QQQ if you're not sure if it's going to work out, right? The A plus setups, you know, you can take a heavy position, take a big position on those, but it's all about risk, you know, risk management. Don't, you know, you gotta let your winners run and cut your losers short. You know, that's the only way that you're going to succeed in the market is by, you know, making sure that your wins are exceed your losses, and that's tough. It's not as easy as it sounds. So, in any event, uh, just continue to trade smart, um, and I'll continue to push as much content as I can to help traders out. That's really what my objective is. I have a proven effective strategy here, and I just want to get it out to folks, all the traders out here in the community. So thanks again, and I'll catch you guys soon.